Hello, everybody. Good day and welcome to Mastermind number 87. It is June 10th, 2024, and thanks for joining me here today. And we just finished Rich Dad Poor Dad. Actually, let me stick to the agenda. So, again, this meeting was inspired by Think and Grow Rich. On our agenda for today, we just finished going through Rich Dad Poor Dad. So, we're going to be recapping what exactly we went through, the different chapters, takeaways in real estate, we're talking about debt servicing coverage rate, debt service coverage ratio. So what exactly is this DSCR? What does it mean for buying commercial buildings, particularly? We'll also go over the news in real estate. In the crypto market, we're going to be going for what exactly is day trading. You hear all these people making all this money through crypto. How are they doing it? We'll also go through market updates. As a disclaimer, the content here is for informational purposes only. You should not construe any information or the material as legal, tax, investment, financial, or other advice. Nothing discussed constitutes solicitation, recommendation, or endorsement to buy or sell any securities other than other financial instruments in this or in any other jurisdiction. I'm not a licensed financial advisor, not a CPA, and not a lawyer. Please consult a licensed professional before making any decision. There are risks associated with investing, and it involves risk of loss. So again, this meeting was inspired by the mastermind concept through Think and Grow Rich. There's a whole chapter on it on the mastermind. And this is a webinar version of it. If you would like to be a part of the mastermind, then you can reach out to me. And it talks about what exactly that mastermind is right here. So without further ado, let's jump right into it. So let me go back on here. So what we did first is that so we'll start with Rich Dad Poor Dad, and then we'll jump into so if you've been following along, congratulations. If you finished the book with me, great for you. If it's your first time, second time, third time, look, we're always growing financially. We're always growing our financial education. And there's really so much to learn. Your dreams continue to evolve and grow and change. And it's really an amazing thing. So if you've read this book and it's had some kind of impact on you, then feel free to reach out. I'd love to hear what exactly that was, and that would be great. So, the book was written by Robert Kiyosaki, and we'll talk a little bit more about the author as well. So it says, "What the rich teach their kids about money that the poor and the middle class do not." So just from the title, you can see that it's intentional. So Kiyosaki growing up, he had two dads. He described his poor dad as his biological father and his rich dad as his friend's Mike's dad. And so he got to see what it's like when Mike's dad was the rich dad, how exactly he operated, what he taught, and how his dad operated as the poor dad, right? And so he got that insight and say he decided to share that with the world in terms of one of the number one bestsellers, what the rich teach their kids about money that the poor and the middle class do not. So you see different classes there in terms of separated through finances in society. There's the poor, the middle class, and then there is the rich. So you may not learn about a lot of these things in school. And you see a quote here from USA Today. Rich Dad Poor Dad is a starting point for anyone looking to gain control of their financial future. And so, forget about finances. You maybe want whatever it is that you want. Money by itself is just useless. It's just the things it is that you can do with it that really matter. Maybe you want to travel somewhere. Maybe you want to do something for your family. Maybe you want a nicer car, a nicer watch. I don't know what on earth it is that you want. Maybe you want to, give back and in scholarships. Maybe you want to invest in something, whatever it is that money is. Maybe you want time freedom, realize that, if you don't show up for work, you're not getting paid. So maybe you want money to be working for you. Whatever it is that looks like, and money may be the cause of that problem, then, gaining a better understanding of your finances helps that. And that's what Rich Dad Poor Dad aims for you. And note it says it's a starting point. It's a starting point. It's not the everything. After you read this book, you really don't know everything. It's exactly that, a starting point. And so, since it's a starting point, what other books can you really, go over and learn from? So here are some of the books, and it talks about them here. First one is Rich Dad's Cash Flow Quadrant, a guide to financial freedom. I had the chance to read this one, and this was fantastic. It was exactly what I needed in a certain phase of life to understand different things. And it's still something that it's a part of my daily method of operation. There are some non-negotiable things that I do every single day, and this is some concepts from here, reminding myself of some of these concepts. There's Rich Dad's Guide to Investing, what the rich investing that the poor and the middle class do not. Rich Dad's Rich Kid, Smart Kid, Rich Dad's Retire Young, Retire Rich, Rich Dad's Prophecy, Rich Dad's Success Stories, a Rich Dad's Guide to Becoming Rich Without Cutting Up Your Credit Cards, Rich Dad's Who Took My Money, Rich Dad, Rich Dad, Poor Dad for Teens, right? Escaping the Rat Race, Rich Dad's Before You Quit Your Job, Rich Dad's Increase Your Financial IQ, Robert Kiyosaki's Conspiracy of the Rich, The Unfair Advantage, and the Power of Financial Education, why A students work for C students. That may be an eye catcher to many people because many people think that, oh, it's best you go to school, get these great grades and everything, and you'll be set. But why exactly would Kiyosaki have the topic as why A students work for C students? This was a real learning opportunity for me as well. As I was one of those A students in school, and I was like, I don't want to be working for C students. So I wanted to learn what exactly that meant, and after understanding what exactly it was, then it made a lot more sense to me. So to parents everywhere, child's first and most important teachers, and to all those who educate, influence, and lead by example. So in our system today, in our schools and more, maybe there's not so much on financial education that is really gone over, and so self-education is what it is that you can take on. Maybe you haven't read a book before. Maybe you've never finished reading a book. Truth be told, I never finished reading off a book until I started reading personal development books, personal growth, and finance books like Rich Dad, Poor Dad, actually. The first book I actually read off was Business of the 21st Century. And that was introduced to me by somebody when I was probably like 16, 17. And it was great. I loved it. I was like, I can see myself, doing this. I was learning stuff that wasn't, what's one plus one and what exactly is the square root of this that nobody's ever gonna ask me. But, how do I do my taxes? What exactly does that mean? So, the first talks about how the rich do not work for money, right? How exactly the rich do not work for money. And simple answer there in terms of what it goes over is that they don't work for money. Money works for them. Maybe you don't even want to be rich, but maybe you will really do, love your job, and that's all it is that you want. And you just want to make a little bit more money. Maybe you want to buy some real estate, own some stocks and more. You just want to be smarter with your money. So the rich don't work for money. Money works for them. So as opposed to, trading time for money, or, just being self-employed and needing to show up somewhere everywhere, maybe you invest in real estate, private equity, stocks, crypto, um, whatever market it is that you would like to invest in. You can go ahead and do that. And some other financial instruments, maybe you run a business, you have your own company and employees, and maybe you get dividends from stocks, whatever it is that looks like. There's a whole avenue there in terms of what to invest in. Stock chapter 2 talks about why teach financial literacy. If you went to school and they taught you all about financial literacy, then you're probably good. But the truth is, most schools do not go over what exactly financial literacy is. Learning about your taxes, what exactly is credit, how do you leverage credit, understanding banking, and more. Minding your own business, literally and figuratively. Staying in your own lane, choosing the path it is that you want to choose, and not, what people think that you should do. Many people, when it is that they work at a job all their lives, and there's nothing wrong with that, but what exactly is your business? When you're working a job, you're minding somebody else's business, and some people really love that. To be an entrepreneur and to have investment property and stocks, crypto, private equity. Some people don't want that. They just want the safety of knowing how much they're going to be paid in a certain period of time. And that's great for them, right? And so Kia talks about if you want to, do things a little bit differently, then mind your own business, right? The history of taxes and the power of corporations. Many people, you can reduce your taxes by starting corporations, right? You can get a lot more leverage as well. And you recognize that when you look at the history of taxes, how exactly they came about, and how corporations came about, many of the wealthy people utilize corporations, and they're fairly simple to start and inexpensive. Actually, you can talk to an accountant or a lawyer, basics on getting one started, book an appointment with one, and understand what exactly you can do with a corporation, how the rich invent money, what exactly that's all about. How do you invent money? Like, do you just print it off of trees? Well, you can turn $10 into $20. You can turn $1,000 into 1,500, and vice versa. How do you go ahead and do that? Working to learn and not working for money. What exactly that looks like, when you're working somewhere else, many times the focus is on the paycheck, how much it is that you're going to be earning, when, a lot of times we can put the focus on the experience it is that we're actually getting from wherever it is that we are. And so you understand the back end of the system, are you just focused on, is it my time to leave yet? And so you will learn a lot from wherever it is that you are working. Sometimes people ask you to do things and you think you're not getting paid for it, and it's great. You Compensation doesn't always equal financial or items. Sometimes it is experience, it's networking. And so, that's a great thing right there. Great lesson in chapter 6. Chapter 7 talks about overcoming obstacles on your way to wherever it is that you'd like to be, earning a couple more $100 a month, $1,000 a month, becoming a millionaire or a billionaire. You will have obstacles. Majority of people do not take this route. Majority of people don't fully understand their finances. Many people, you'd be surprised, are in debt, and that's okay. You can get out of debt. Then he gives tips on so overcoming the different obstacles. He gives tips on doing those different things. You're guaranteed to have obstacles. That's the one thing you'll definitely be sure of, especially if you take the investing and the entrepreneurship route. And great, an obstacle is another great opportunity as you keep going, because that's a new thing that you haven't figured out, and you welcome the opportunity to say, how exactly can I figure this thing out, right? It's a mentality thing, it's a mindset thing, it's a perspective. People see obstacles sometimes and they think, I don't want to have to deal with this. I don't like this. I don't want to have to do this. Well, you keep going, you're gonna reach on more obstacles, and you should approach it in the way that this is a new problem for me to solve, and you learn something new, right? If you're not being challenged, then you're not learning and you're not growing. Getting started, so it gives you different tips on getting started, step by step, and to do's and with different things, because you've now gotten a lot of information passively. You've just rewired a couple of your brain neural pathways, your brain's neural pathways. And so what that means is that you didn't understand taxes before, you didn't understand money before. Now you have a better understanding of money. You are a different person at the end of reading this book. And so you have changed, but you want to go ahead and take action. Learning the information is not just enough. You want to go ahead and take action. You don't even need to take action, immediately. It's recommended that you really do, but don't wait until you read the book 10 times and then you go ahead and implement. It's not a test that anybody is testing you on. It's the test of life. You keep moving forward. When you meet up on an obstacle, go back and look what exactly the book teaches, or find a mentor, ask somebody who you think has good control over their finances and the things that they do. Hey, what did you do? And then you get tested, and it's a test of life. It's real world stuff, right? So that's what that goes over right there. And then he talks about some to-dos there, and his final thoughts. So those are the basics in terms of what exactly the different chapters are with Rich Dad Poor Dad. If you haven't read the book, then you can get a free ebook online, or if you don't understand fully how to do that, that's okay. Send me a message and I can send one to you. Just send me your email actually, and I'll send you the book. So at the end, I think I went over this. Oh yeah, I did. Where am I? Why is the introduction at the end? One sec. Here we go. Here we go. Finding my path. Finding my path. Finding my path. I'm actually finding my path right now. I think maybe I didn't finish the book then. Ha 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 ha. What is your life goal? Oh yeah, that means I didn't finish it. Editors note there have been many changes in our economy and the investment landscape. Da, da, da. Okay, that's why. Okay, it's talking about the cash flow quadrant. Right after that, that's what it's talking about. Here's this Kiyosaki and Donald Trump, and they wrote this book together. Why We Want You to Be Rich. Well, I per se wrote the book together. So yeah, this is where we stopped last time, and I'll say, just like he said, I wish you great wealth and much happiness with this fabulous gift called life. And so I'll finish by, on this note, talking about the author. Best known as the author of Rich Dad Poor Dad, the number one personal finance book of all time, Robert Kiyosaki has challenged and changed the way tens of millions of people around the world think about money. He's an entrepreneur, educator, and investor who believes the world needs more entrepreneurs who will create jobs. With perspectives on money and investing that often contradict conventional wisdom, Robert has earned an international reputation for straight talk, irreverence, and courage, and has become a passionate and outspoken advocate for financial education. Robert and Kim Kiyosaki are founders of the Rich Dad Company, a financial education company, and creators of the Cash Flow Games. In 2014, the company will leverage the global success of the Rich Dad Games in the launch of a new and breakthrough offering in mobile and online gaming. Robert has been heralded as a visionary who has a gift for simplifying complex concepts, ideas related to money, investing, finance, and economics, and has shared his personal journey to financial freedom in ways that resonate with audiences of all ages and backgrounds. His core principles and messages, like your house is not an asset and invest for cash flow and savers are losers, have ignited a firestorm of criticism and ridicule, only to have played out on the world economic stage over the past decade in ways that were both unsettling and prophetic. His point of view is that old advice, go to college, get a job, save money, get out of debt, invest for the long term, and diversify, has become obsolete advice in today's fast paced information age. His rich dad philosophies and messages challenge the status quo. His teachings encourage people to become financially educated and to take an active role in investing for their future. The author of 19 books, including international blockbuster Rich Dad Poor Dad, Robert has been featured guest with media outlets in every corner of the world: CNN, BBC, Fox News, Al Jazeera, GBTV, PBS, Larry King Live, Oprah, People's Daily, Sydney Morning Herald, the Doctors, Straits Times, Bloomberg, NPR, USA Today, and hundreds of others. So his books have top international bestsellers list for more than a decade. He continues to teach and inspire audiences around the world. His most recent books include Unfair Advantage, The Power of Financial Education, Midas Touch. The second book he has co-authored with Donald Trump, and Why A Students Work for C Students. And to learn more, visit his website, richdad.com. And here's a picture of the book, and it goes over all of that right there. So I think that, yeah, this is a part of the next book, which is Cash Flow Quadrant, which would recommend to be a definitely a good read for anybody looking at understanding money better. And this is a different perspective and gives you, you'll find out which quadrant that you're in. Are you in the E quadrant, the B quadrant, the S quadrant, or the I quadrant? So we're done with this book now. And the first book that we did is Think and Grow Rich. The second book we did is Rich Dad Poor Dad. And the third book, I'm happy to announce, is going to be The Magic of Thinking Big. The Magic of Thinking Big. So you can find a copy of it online if you want to follow along. And we are gonna start that there next week. So thanks for joining me through Rich Dad Poor Dad, and I look forward as it is that you join me through the magic of thinking big. Now I'm gonna jump over into Real estate. So, um, debt service coverage ratio is what it is that we're talking about. So, and then we'll go over a bit of the news that's going on in Canadian real estate right now. So, what exactly is this debt service coverage ratio business that we're talking about? Commonly known as DSCR. You'll frequently see this with regards to commercial buildings, so meaning 5 units and above. So the debt service coverage ratio measures a firm's available cash flow to pay current debt obligations. The DSCR shows investors and lenders whether a company has enough income to pay its debts. The income is calculated by dividing NOI, that's net operating income, by debt service, including principal and interest. The DSCR is a measure again of the cash flow available to pay current debt obligations, measures the business's cash flow versus its debt obligations. Lenders now use the DSCR to determine whether a business has enough net operating income to pay back loans. And then it tells you how to calculate it there. So here, let's go through a basic calculation. So it equals net operating income divided by the total debt that your business is servicing. And you may wonder, what exactly does this mean in real estate as a business? So in Canada, you'll find that for buildings that are 5 units and above, they're classified as commercial buildings. There's a big difference. And so when banks and when lenders are looking at, loaning money, with commercial buildings, they look for an ideal debt service coverage ratio. Sometimes maybe 1.2, 1.25, 1.3, 1.4. Now things are different, so they're loaning less money. The loan to values you'll find are going to be a bit different right now. Um, and so when you go ahead and you do your numbers per se, you want to have a higher DSCR. So how much really is your hold on. Should I probably just use an example that would have made it way simpler. Way simpler. Example of lender terms here. Okay, yeah, I won't be able to do an example right now. So I'll give you the basic overview. You have a property, 5 unit building, for example. You have your income, you have your expenses. From your income, again, so you get your net operating income. How do you get your net operating income? You have your net income, great. And then you have your gross income, then you're minusing your expenses, your total expenses. So water and sewage, electricity, insurance, property management payment if you're paying a property manager, all those expenses, right? And so you have their net operating income, and then you divide that now by the total debt it is that you have to service. Now, what does that mean? If it's a monthly mortgage payment, then you divide it by the monthly mortgage payment, or rather, you're really doing it annually. And so you have your total net operating income for the year, and then you have your total debt that you have to service, and you divide that amount. Then you probably, if you do it for any basic commercial building in Canada, you'll probably get something like, between maybe 0.5 to 1.5. If you're lucky, you can get like, well, yeah, probably like 1.3. And so you want it to be higher. Essentially, how many times after you have your income, is this really go how much of the debt is it going to cover? Is it barely covering the debt, or do you have some cash flow at the end of it? The healthier it is that the building is, the more lenders are willing to approve. So you want a higher debt service coverage ratio for your commercial real estate property. And so that's what debt service coverage ratio is. Should probably use an example, but you can go ahead. Again, this is just an introduction, for stuff for you. So let's go into the news now, and I'm not gonna spend too much time on here as I'm running over my time. So again, we are not seeing great news. Well, arguably, we did see some good news last week. Some people would say it's good news. we had a rate cut, and rates finally went down a bit. Many people are very, very happy about that. So Canadian unemployment still climbing as population outpaces jobs 3 times. So population has outpaced jobs 3 times. Where are people gonna work? So the population is growing, but the job market, it's not expanding, 3 times as much. Canada begins real estate developer bailout with 55-year loans. So longer amortizations for developers as they build a lot more housing in Canada and help to solve our housing crisis. Canadian economy underperforms US largest gap on record according to RBC. So we're talking about Canada in relation to the US. Bank of Canada cuts rates but warns of excess supply. Policy still restrictive. As widely expected this week, the Bank of Canada cut its key overnight rate by 0.2 points to 4.75%. So returning to a level it saw less than a year prior. Bank of Canada Governor Macklem attributes the cuts to a slowing economy, warning that excess supply is beginning to appear. While excess supply is good news on the inflation front, cutting rates can also increase demand for certain goods like housing, thus driving costs higher. And we saw in an article last week where the Prime Minister was saying that they want housing prices to be higher. Toronto real estate spirals as inventory surges, demand hits historic low. GTA real estate suddenly seeing a surge of supply, but demand isn't catching the same headwind. Well, people can't afford it. That's the truth. The local board reported just 7,000 sales in May, a drop of 22% from last year. With the exception of 2020, that makes it the worst May since 2000. Since 2000. Right after it is that we're out of the snow, and it's the worst since 2000. At the same time, a surge of new listings has produced the worst demand balance on record for the month. Wow. Vancouver real estate inventory climbs for 46%, weakest demand in years. People cannot afford real estate in Vancouver and Toronto. And so we saw where rates were cut, but we were having an excess of supply. Canadian economy underperforming. The bigger gap in terms of with where the US is performing. Real estate developer bailout with 55-year loans, so developers have a longer times to pay off their loans as they're that makes sense because they're solving the housing crisis here. Canadian unemployment still climbing as population outpaces jobs 3x. So many opportunities that people are seeing there. Well, if you have the money, then there's a whole bunch of supply in the Ontario, in the Toronto area and in Vancouver. So if you really wanted to, buy something, well, this is what the article is saying. You obviously want to read with more in depth and understand your market intimately. Reach out to realtors, people who you need in your power team, and more to understand the market more intimately. Don't just jump off of one article and do something. So there is that unemployment still climbing as population outpaces jobs. So we're seeing where it is that population growth has outpaced the growth in terms of that with jobs, and that's not a good look as you have people not working, and so there's a lot more government. Well, there's an intricate relation, but you'll have a lot more government money that's going to need to go out. So that's that. Therefore, real estate again, there are always opportunities. Don't let the news fool you in terms of anything that there are no opportunities. There are so many opportunities out there. I was looking at different buildings this past week. There are opportunities everywhere. There are opportunities everywhere. Come up with a plan. It helps if it is that you have a mentor. So reach out and try to get a mentor. Somebody that knows what they're doing, has the results that you are looking for, and you go ahead and you take action. Go ahead and achieve your goals. Work full time, save up your money, buy some real estate if that's what it is that you want to do, or go full-time real estate investor. That's also fine. Like, do your thing, live your dreams. You can own real estate, and it doesn't have to be only your principal residence. You can own investment property. Believe it. So let's pause here now on the real estate market, and let's jump into the cryptocurrency market. And what are we seeing here? We're talking about day trading today. My apologies for yawning while I am on this thing here. The live, the live, the live, the live, the live. Let's see what we're seeing. So we're seeing not much change over the past 7 days. Bitcoin is at 69,478 on June 6, 2000 and wait, no, June 10th, 2024. Dogecoin is down 8%. Toncoin is up 6%. Toncoin has been going crazy since February. Since February, Toncoin has been going crazy. Avalanche is down 8%. So we see Avalanche and Dogecoin have been down. Toncoin is up. Chainlink is down 10%. Near Protocol is down 10. Uniswap is up 7%. Pepe, Pepe is down 15%. Render is down 13. Monero is up 15. Stacks is up 17. So mostly losers this week. Winners we're seeing, so far it's Stacks that's up 17%. Injective Protocol is up 16% as well. So Stacks and Injective are up. Airweave down 14. Phantom is down 15. Bank is down 15. Notcoin down 17. Notcoin has been going crazy this past 2-3 weeks actually. Breaking into it's at number 55 now in coin market cap. So there's this coin. That's what we're talking about here. Lido DAO is down 18%. Fetch is down 22%. AI coin here. Aave is down 10. Ordinals, Bitcoin Ordinals is up 19%. Surprise, that's the biggest winner so far. Beam is down 19%. WorldCoin is down 15%. Singularity is down 20%. Oasis is up 16. Mantra is up 12. EOS is down 12. EOS has been around for so long. It's at number 99 now. Up 7% is LifePeer. Let's see. Dog Runes is down 20%. Dog Runes is down 20%. Constitution DAO is up 19. It's still going up. Constitution DAO is going crazy. Avo is down 24%. So Constitution DAO is going crazy. Echelon Prime is down 15. Cat in a Dog's World is still pumping. It's at up 23% over the last 7 days. Jeez, this thing is going crazy. It's a funny name though, to be honest. It's kind of catchy, isn't it? Yeah, it's kind of catchy. ETH5 is down 17%. Binary X is up 20%. Polymesh is up 21%. Dimension is down 24%. 22%. WeMix is down 22%. And 24% Yield Guild Games is down 24%. So we saw, I think his Yield Guild Games is down 24. That's our biggest loser. And what was our biggest winner? Maybe you remember. If you do remember, please tell me. So Yield Guild Games so far seems to be the biggest loser. Binary and we have Polymesh at 21%. There was something up like 27% though. Cat in a Dog's World. I never get tired of saying that thing. So now that you see that things are in red, you want to buy when things are in red, right? You want to open a chart, look at it, buy when things are in red. And when it is that they are in green again, then you sell. It's not that hard, right? And you don't need a lot of capital to start. You can do something very, very simple, like for example, Mina. go buy, for example, Mina. I'm not telling you to go and buy anything. I'm just saying for those who want to participate, then you can start with a small amount, $50, for example. Open an account on some centralized exchange, deposit money, and you buy, for example, $5 worth of a coin, $10 worth of a coin, $3, $4, $6 worth of a coin. Like you can do that on some exchanges actually. And you just let it sit. You realize render is down 13%, Pepe is down 15%. You like the name of it. You play around, get exposed to the market in a soft way. As that's how you play. You have to play the game in order to win. It's not a game. Over time, you'll understand the markets better, and you'll realize that you're not gambling. You're making educated guesses. You're guesstimating. Well, kinda, not really. You're really analyzing. Ordinals is up 19%. Uh, Speaking of that, that's where day trading comes in. So it's the practice of frequently buying and selling assets in order to make a profit on intraday changes in their price. So in stock, crypto, and other markets, the prices of assets tend to change continuously during the day under the effects of supply and demand. Most of the time, especially in less volatile environments, these fluctuations are too small to be a concern to long-term investors. However, there is a category of market participants called day traders who actively try to extract a profit from these movements. So if you look at different charts over time, you'll realize that you can see, for example, different patterns. And from those patterns, you'll use different ways of analyzing and understanding that, okay, at this time, this normally happens based on this, stochastic, this technical analysis, some support and resistance, and so many more things it is that people do. So they're swing trading, scalping, right? Different mistakes, over trading, FOMO. Like once you start on this journey of trading, you're bound to do something that you're not happy about, and you learn, right? Traders don't try to win every trade. Traders try to have a winning percentage, right? That's how it is that you become a consistently profitable trader. Now, um, let me see. Let me give you an example of what it is that I mean. Oh yeah, that's why I clicked on this thing. So let's say that you were looking at, for example, what exactly does that mean? So simply put, you look at, for example, the volatility on different coins, and you're day trading maybe, daily or weekly or whatever trading strategy it is that you decide. Trading becomes way easier when you have a mentor. It shortens your time frame just like anything else. For example, in the last 24 hours, you could even trade it over a 7-day period. You realize these fluctuations. 8% Dogecoin, is down the past 8 days. Toncoin is up 6%. You could trade those coins, right? And so basically you're saying that, okay, Toncoin is at Dogecoin is down 8.6% now. It's at 14 cents. You're saying that based on your analysis, in at this time it's going to be it's gonna hit 15 cents next, right? At some point in time next. And you put your take profit and your stop loss. And if it hits your take profit, then you make money, right? You're the winner in that case. And so that's what you're looking at. Over the last 24 hours, we even have a lot of change. BNB is down 7%. You'll find there's a lot more volatility in the cryptocurrency market as opposed to the stock market. 1.3%. Toncoin is up 1.33%. Uniswap is up 5%. Like you see those changes. Even these like 0.96% changes, 1.2% changes. They may be minuscule, but they're enough to move where it is that you can make. So traders make money when the markets go up or down if they know what it is that they're doing. The market doesn't need to go up or down, for you to only be able to make money. Market goes up, you still make money. Market goes down, you still make money because you're predicting where the price is going to be, You're predicting what's going to happen. You're like a prophet, right? And for your prophecies, you get paid, all right? And so that's what it is that we're looking at. So that's what being a day trader is like. So today, let me just recap and we'll stop there for today. So again, today we went over Rich Dad Poor Dad recapping. Our whole thing there on Rich Dad Poor Dad. Next, we're gonna do the magic of thinking big, and then we're gonna be so real estate went over debt service coverage ratio. Different lenders have it different ratios that they look for. Again, that's net operating income divided by your debt servicing, and that gives you your debt service coverage ratio for commercial buildings. News in Canadian real estate: Toronto and Vancouver properties, people are not able to afford them. Rate cuts 0.25 basis points were cut. So basically 0.25%. Population growth is outpacing, jobs by 3x. Longer amortizations with 55-year loans for developers as they help to solve the housing crisis in Canada. In the crypto market, we see where it is that Bitcoin, not much change over the past 7 days, still at roughly 69,000. Winners and losers, I forgot what they were today, but you can, check that out. Um, they're mostly losers though. You had a couple coins that were up a fair amount as well. Um, we talked about day trading, so swing trading, scalping, swing trading and scalping. You can arbitrage as well, and so where that's what it is that we have been looking at. So with that being the case, that's it, everybody. Peace and love. Big up on yourself and reach out if you have any questions. Download the Magic of Thinking Big online. Like, it's very simple. You can go ahead and find it. And that's all for today. So thanks for joining in. See you next time.